Experts reveal Tesla price target after split. After finishing at $891 per share, Tesla stock has officially split 3-for-1 and will now begin trading at approximately $297 per share. Because Tesla is the largest automaker solely offering electric vehicles, its stock is a useful barometer of the shift to electrification. What was Tesla's price before the split, and what is the price target for Tesla after the split will be discussed in this video. Ensure that you don't miss out on anything. Also, don't forget to subscribe to Trend Capital either. So let's not waste any more time and let's begin! Should you buy Tesla stock now after the split? On August 4th, Tesla stockholders voted to approve a 3-for-1 stock split. On Wednesday, the number of issued and outstanding shares of Tesla stock will formally split, increasing to 4 billion. This Thursday, trading will resume at the split-adjusted price. It is expected that the Tesla stock split will boost interest in the company's stock. July saw Tesla announce second quarter earnings that topped analyst projections. The following day, shares increased by 10%. Even as the expected Tesla stock split news has been delayed, they have continued to rise. The price of Tesla shares rose over their 50-day moving average for the first time since early May on July 8th. Now it's trying to break out above the 200-day moving average, but it's meeting resistance there. The share price has not recovered to its former highs. Following the market downturn, Tesla stock has been trending lower, approaching its 21-day exponential moving average. The price of Tesla stock is far from being a good buying position right now. MarketSmith's analysis of the daily chart shows that the stock price is currently in a long consolidation at a $1,208.10 purchase target. The stock needs more time, but aggressive traders may benefit from a narrow trading range around current levels. The Inflation Reduction Act, which includes new restrictions for EV tax credits, was recently passed, and this is seen as good news for Tesla. Estimates for the year 2023 have been revised upwards by analysts. The price target for Tesla stock has increased to $12.29 by 2022, an 81% increase from 2021. On August 18th, thanks to the stock's continued upward trend and recent gains, Tesla was included in the IBD 50 list of top growth stocks. A stock split is defined as: in a stock split, one share of stock is divided into several new ones. When a firm divides its stock 2-for-1, the share price falls by 50%, while the number of shares doubles. When the value of a company's stock has increased significantly, it may decide to split the shares. By reducing the stock's price, the split makes it more affordable to a wider audience of potential buyers. Perhaps now would-be shareholders can afford to invest. However, a split does not affect the value of the business at present. Shares issued might be decreased through a reverse stock split. To keep their shares from being delisted, companies in financial distress will sometimes announce a reverse stock split. If a company's stock price is $5, a 1-for-2 reverse split might raise it to $10. If there were originally 100 million shares in the corporation, this would result in a 50 million share decrease. What impact do stock splits have on my portfolio? After a stock split, the dollar value of your investment remains the same. Simply put, you will have a larger shareholding. The same principle holds if your share in a corporation is fractional. In the event of a 2-for-1 stock split, an investor who formerly owned half a share would now control one full share. In other words, you would have 100% ownership of that stock. A stock that pays dividends is Tesla stock, for example. After a stock split, dividends are typically lowered following the new number of outstanding shares. In the end, dividend payouts in total will remain untouched. The impact of splits on options. Suppose you own a call option on a stock that has recently been split. If this keeps up, then what? Holding an options contract for a split stock will result in a new calculation that takes into account the new price of the stock without changing the value of your contract. While the new share price and quantity will be reflected, the total value will remain unchanged. The phrase, "being made complete," describes this state perfectly. A contract covering 100 shares at a $100 strike price would now cover 200 shares at a $50 strike price if the stock were to undergo a 2-for-1 split. Stock splits and trading activity. According to statistics from Dow Jones, S&P 500 stocks gained almost 12% on average in the year after their stock splits from 2012 to 2021. Based on the same data, it can be concluded that the frequency with which S&P 500 companies split their shares of stock has increased in recent years, reaching its highest level in almost a decade. Extreme stock splits have occurred at market peaks in the past, most notably in 2000, when tech stocks reached an all-time high. In May of 1999, for instance, Qualcomm shares were split in half. In December 1999, the company shares were divided 4-for-1. Following the initial stock split announcement in 1999, Qualcomm stock increased by more than 840%. The price of the stock skyrocketed from $21 in April 1999 to $200 on January 2, 2000. Do split stocks signal a good time to sell? Stock splits are often seen as positive by investors. However, a rapid succession of stock splits may be an indication that it is time to sell. Investors that are willing to pay more for security like Tesla stock tend to be risk takers. Although this may scare off some potential purchasers, it often attracts more institutional investors willing to back the stock. Early stock splits, on the other hand, usually don't cause any issues. In the early stages of a bull market, after an initial stock split, it is not uncommon for shares to rise. However, issues arise when businesses implement many large splits within a short time frame, that being less than 2 years, such as a 2-for-1 and a 3-for-1. Any Tesla stockholders out there should know that a 5-to-1 split was approved by shareholders in August 2020. In conclusion, Tesla stock. Speculators may be enticed by a stock split like Tesla shares because it gives them a chance to purchase a previously more costly stock for a much reduced price. However, a stock split is never a reason to purchase a stock. Before investing, it is important to do your homework, monitor stock charts to determine when to make purchases, and zero in on firms with strong fundamentals and strong price performance within their industry. As to the cause of Tesla stock's recent drop in price this day, well, let's see. Despite Elon Musk's tweets touting the desire for electric vehicles, complete self-driving features, SpaceX updates, hilarious memes, and his legal war with Twitter, Tesla stock price is expected to decline at the opening bell on Thursday. On Wednesday night after the market closed, shares of the electric vehicle manufacturer were split 3-for-1. As a result, the value of a single share has dropped to around a third of what it was just a day ago. On Wednesday, Tesla closed at $891. This Thursday's trade was a little under $300. This was Tesla's second split in less than 2 years, and it was granted in June. Be aware that the value of Tesla has not changed, so there's no need in getting too excited over the cheaper price of a single share. The value of the corporation following the separation is about $930 billion. Continues to trade at a massive premium to the values of conventional automakers including Ford, General Motors, Volkswagen, and Toyota, where shares sell at a multiple of fewer than 20 times 2022 earnings expectations. As investors fret over the rising competition in the EV industry from traditional automakers and Musk's many potential distractions, the stock is still down around 15% this year. Existing shareholders now possess 3 times as many shares of Tesla, trading at 1/3 the price they ended at on Wednesday due to the stock split. Forbes estimates Musk's net worth at $264 billion, making him the wealthiest person in the world. Somewhere over 15% of Tesla's common stock is still owned by Musk. So what do you anticipate the Tesla price to be after the split, friends? Put your thoughts in the space provided right here. And please keep in mind that the purpose of this channel is not to give financial advice, and we do not recommend or encourage you to invest in any particular firm. This is how educational interaction is brought right to your front door for your convenience. In light of this, we strongly suggest that you perform an extensive study on the subject before making any purchases related to it. And we are appreciative of the fact that you watched our video today. Please like and subscribe to the channel so you may stay up to date with the most recent information. Up until then, we'll see you soon.